biggest gain, biggest loss, or if we covered that?
It's not always easy. I mean, in my earlier career, I was doing what was called relative value trading. I was trading portfolio of derivatives against money market instruments, and we had some huge gains and huge losses and huge swings, but that was more of a portfolio approach. So it's hard necessarily to compare that. In terms of my own trading, I'm going to talk about proprietary trading, which is something I did later on in my career. In my last 5 years, that particular trade where I made $2.50 on was the biggest sort of trading gain I'd had in one particular trade. My biggest loss, probably, if I use that as a parameter, was maybe $200,000-300,000, which actually was in the build-up to putting that trade on in one particular go. I had a very rigid stop-loss rule. I tended not to put a loss on more than, say, $50,000 to $100,000 on any one particular trade. I could think of another trade where I dropped $250,000 on. It was a similarly structured trade to the trade we described just now, but it ended up later on being another very successful winning trade. So I think you've got to balance it against what you're doing. I mean, you can have large drawdowns when you're in the money. If you're trading the sort of method where you have a kind of 80-20 rule, which is what I do, sort of 80% losses, 20% wins, you can go through a long string of small losers that can draw down quite heavily. And I've had those both in my private trading and my trading for a bank, my proprietary trading. So I've probably had a period where I've drawn down $500,000 working for the bank in a string of trades over about 3 months where I've just not hit any winners.
Is there one speculative investment, win or loss, that you can remember that's had a profound effect on your development as a trader stroke investor, and what did you learn from it?
I started in the market in 1986, and my very first position they gave me, allowed me to run, was in October 1987, about a week before the October crash. And that obviously had a very profound effect on me. And I had, in those days, I was trading my own private stocks as well, and it shattered a lot of illusions. I actually did okay, but I think that's how I became a bear market trader for probably the first 10-15 years of my career. I think I began to believe that's how you make money. Bear markets happen very quickly, very fast, and there's a lot of money to be made in those markets. And that's what worked for me in those early days. And I made a lot of money in the 1994 bond bear market, trading bonds. And again, I think I felt for a long time that the big money was made in bond markets. But of course, we had a bull market in bonds and stocks for a long time after that, and those were quite painful times. And that's where I had to learn that actually you've got to learn to make money in both environments. I don't think you can just be you could be a bull trader or a bear trader, and I don't think you could just be either a trend trader or contrarian trader. And I meet a lot of people that say they're one or the other. Traders who've been in the job many years, but that means you're missing lots of opportunities. If you're just a contrarian trader, great, but there's a lot of times where the pro trend is giving you a lot of opportunity.